Ignition sequence starts. 6, 5, 4, 3, 2, 1, 0. Liftoff. We have a liftoff.
Hey everybody, this is the Digital Asset Investor, and I've still got a bunch of video that I've got to go through from the hearings. You'll be hearing this at 6 a.m. On Tuesday morning, but I'm recording it on Monday. But anyway, first I wanted to show you that Ripple had been named in the FinTech 250 again. You'll see right about here is Ripple under payments and processing networks. Now let's move along. I want to show you this. So there are several Congress people now who are jumping on Gary Gensler, not as aggressively as you and I would like, but they're starting to get on him. John Deaton's law firm, Crypto Law, had put this out yesterday. Here's Carolyn Maloney.
Ask you about cryptocurrency. You called it a highly speculative asset class. Do you think, and it's really a speculative investment, do you think it should be treated like a security, regulated like a security? Pardon me?
First, it's good to see you again, and I think it's always based on the facts and circumstances. But many of these projects, and there's 5,000 or 6,000 of them. But many of them are basically saying to the investing public, give us your money, and we have a small group of entrepreneurs and computer scientists that are going to build something, and based upon that, there's a hope and anticipation of reward or profit.
You mean like Ethereum did?
And Jay Clayton, my predecessor, said it in congressional testimony that most of these or many of these fit that definition.
Now, as you watch these videos, I want you to be thinking something, because this is what I'm thinking. If this guy was acting in good faith, the Congress people would be saying, hey, Gary, wait a minute, hold on. You're going to kill innovation if you just start doing all this enforcement stuff. What we want you to do, because you're pro-United States, right? Right? What we want you to do, and Gary, they shouldn't even be having to ask him this. What should be going on, if we lived in a sane world and this guy did not have bad intentions, he'd be saying, well, here's what I'll do. I'll hold off on all these enforcement actions, and I'll come up to Congress and we'll all sit down and we'll meet and work this thing out so that we don't kill innovation. That's not what he's doing. What he's doing is he's saying, well, until you guys write something, I'm just going to keep enforcing and keep hammering away at this new industry. And if I destroy it, I destroy it until you guys get something worked out. Now that is the problem. Keep listening.
And so do you think it should be regulated like a security?
Look, I think that I've asked projects to come in and talk to us, because I can't say that it all fits together well, let's say in our transfer agent rules and some of the intricate underpinnings of our capital markets. But Congress painted with a broad brush to protect the public against fraud. And that's done through our securities laws when people are raising money from the public.
This is intentional unreasonableness is what you're seeing right here. And there's a reason he's doing it. I don't know what the reason is, but there's a reason that he's doing it.
He has all the authority that it needs to regulate this cryptocurrency if you should decide to do it, or does Congress need to give you more authority to be able to regulate the cryptocurrency?
I thank you, and it's a question also the ranking member asked in a little bit different way earlier, is I think that our statutes are clear and Congress painted with a broad brush what is a security. But I think working with Congress, there are some gaps and there are some places that we can work, whether it's our relationship with our sibling agencies in the market regulatory space, but also as it relates to, for instance, what's come to be known stable value coins and how to think through that with the bank regulatory regime as well.
Yeah, but until then, I'm just going to kill the I'm going to keep trying to kill the industry until you guys just whatever. I mean, come on. And then this was Tom Emmer. He's one of my favorites. And listen to this.
To be our guide star on this. I yield back.
The gentleman time has gone by. The gentleman from Minnesota, Mr. Elmer, is now recognized.
Thank you, Madam Chair. Can you hear me?
Yes, I can hear you.
Thank you. Chairman Gensler, thanks. Like everyone else, I want to thank you for appearing before the committee today. Appreciate your time. You've already covered this topic with some other members, but I want to go into it again. There are millions of Americans, as you know, who hold cryptocurrency. Specifically, over 55 million Americans are now engaged in this asset class. And the value of these cryptocurrencies, the value of the market, is approximately $2 trillion. You've been outspoken in that you think most cryptocurrencies on the market are securities. I couldn't disagree with you more thoroughly. I believe most cryptocurrencies are commodities or currency. But for the purpose of better understanding your perspective, I have several quick questions I'd like to run through during my time, and I'd appreciate quick responses to each question. Chair Gensler, let's say someone who issued a token agrees with you and thinks that their token is a security and they want to register it with the SEC. If they register it, can they trade it on the New York Stock Exchange, or could they trade it on NASDAQ?
It would somewhat depend on NASDAQ and New York Stock Exchange listing rules and how they register it, but there's multiple ways to register. If they registered and the New York Stock Exchange and NASDAQ said yes, that might facilitate it. Nobody's asked to do that as far as I understand.
Actually, the answer is no. Can a broker-dealer like Charles Schwab, another question, deal in a digital asset that has gone through SEC registration? In other words, would they be able to trade these digital asset securities and custody them?
Well, the custody is really the issue that you mentioned. We have not been able to sort through. There's a feature of crypto assets, which is that a private key transfers ownership. That's a feature, but it also creates challenges, or some would say it's both a feature and a bug of the custody of those crypto assets.
Again, I believe the answer is no. And I think earlier today you used the term stable value coins. There's no such thing. Value is a term that you put in there. They are stable coins. Chair Gensler, as you know, there are about 100 tokens with $1 billion market cap. Let's say you deem one of these coins with $1 billion market cap and tens of thousands of investors as security. What happens to those investors, sir?
Well, if the coin were to come in and to actually register, those investors get the benefit of our securities law. Right now, they don't have the benefit of that basic bargain that we protect people against fraud and manipulation in our capital markets, is they get full and fair disclosure.
He knows full well what happens when he does that. He destroys the value of it. He knows this. Think about how detached from reality you have to be, or think about what a cold fish you have to be completely to not give two rats' asses about how that affects, and to then in the next sentence say that all we care about is protecting investors. It is a bunch of bull, folks. This guy is a creep show.
They're not getting that right now, and it's falling short, and people are going to get hurt.
No, they're going to get hurt when you call something a security after for 8 years. You in Ripple's case, for 8 years you let people, the SEC lets people trade in this thing. Then they come along and say, "Oh, that's a security," and they kill the value of it in 24 hours. And these people have the gall to talk about, all we really care about investors and protecting investors. It's a load of crap.
Actually, what will happen under that scenario is the value of the token will plummet, and retail investors, the very people you are supposed to protect, will not be able to trade in it. So I guess where I'm going to go with this, if there's no path for them to be traded anywhere, wouldn't investors be hurt by your enforcement actions? And what are you doing to solve this problem? What are you going to do?
What I've said publicly, and I mean this, is come in, work with us, if the rules that were written in other
They want them to come in and work so that they can make a freaking file on these companies and go after them.
decades don't quite fit these digital investment contracts, and that's what many of these are. They're entrepreneurs, computer scientists that are raising money from the public, and the public is anticipating profits.
You mean like Ethereum?
And that's why Congress painted with a broad brush, and the investing public is relying on some group of entrepreneurs and computer scientists for their profits. And I'm glad to work with projects, work with Congress if you want to repeal the laws as they are, so that fewer people are protected against fraud in these markets.
And actually, Chair, I appreciate the answer. I don't know that at the end, we still disagree on the securities aspect. I think the vast majority are currency or commodities. But this is why it's really important for the SEC to develop a framework that the crypto industry can operate in. Crypto is one of the highest performing asset classes in decades. Retail investors got into this space before institutional ones. And your job, the SEC's mandate, is to protect investors, maintain fair, orderly, and efficient markets, and facilitate capital formation. When you make conclusory public statements and regulate through enforcement action, you jeopardize that mandate. I encourage everyone to take a look at my bipartisan bill, the Securities Clarity Act, which amends securities law with a new definition, the investment contract asset, so the SEC can work with issuers to swiftly determine when a token is offered as part of a securities contract and when it's not. Thank you again, Chair Gensler. Madam Chair, I yield back the balance of my time.
All right. And then we had, and here's Tom Emmer. He had done a thread after this. He says, Gensler thinks that most cryptocurrencies are securities. Let's indulge his line of thinking for a moment, just so we can see how harmful it is to everyday investors. And by the way, I plopped in here the video where Joseph Lubin is saying that he was given he had a piece of paper in his pocket when he issued Ethereum. And I said, it's much worse than you think, Tom Emmer. Then he says, let's say someone who issued a token agrees with Chairman Gensler, wants to register it as a security with the SEC. Once registered, can this token trade on the NYSE or the NASDAQ? No. Can a broker-dealer like Charles Schwab deal in a digital asset that has gone through the SEC registration? Would they be able to trade those digital asset securities and custody of them? No. If Gensler deems a coin with a $1 billion market cap, tens of thousands of investors, a security, what happens to those investors? The value of the token will plummet and retail investors won't be able to trade it. Clearly, there is no path for digital asset securities to trade anywhere. So it is clear that retail investors would be hurt by Gensler's actions. Step out of the way, Gary Gensler, is what he says. Then Maxine Waters, who apparently loves Gary Gensler, James Rule, and I didn't read her lips here. You can see it right here. He says that she said that piece of shit, referring to Tom Emmer.
Recognized for 5 minutes.
Thank you, Chairwoman, and thank you, Chair Gensler, for being here. And thank you for your willingness to work on modernizing our corporate disclosures. And of course,
I don't know what she said there, but that was James Rule's interpretation. And finally, now we've got Warren Davidson, who has also weighed in, and this is also from John Deaton's website. This guy's another good guy in Congress.
Your time here today. In 2018, there was a New York Times article that discusses your views on blockchain and various cryptocurrencies. One of the cryptocurrencies discussed in the article was Ethereum. In the article, you say that Ether could have problems with securities laws because some of the first tokens were sold by the Ethereum Foundation before the network was actually functional. You go on to say that Ethereum could get off the hook from securities laws due to the fact that it developed into a decentralized network. You've repeatedly said that you believe initial coin offering tokens are securities, but right here it's sounding like you're acknowledging that Ether transitioned from what would have been a security into a commodity once the network was adequately decentralized. Can you clarify when a token is sufficiently decentralized to no longer be a security in your view?
I thank you for that, and digging back to an article from 3 years ago. But I was honored to study and research these issues at MIT. And what I was commenting on then was a process that the SEC was going forward on, and I think then head of corporate finance was talking about in that time frame. And so without going into any one token, what I think the core test is, and it's the test the Supreme Court has taken up numerous times with a broad brush, are you raising money from others and the investing public anticipating profits based upon
The follow I hate that Warren Davidson didn't do it, but as soon as he goes through this load of BS that he's talking about, the follow-up freaking question is, well, that's what Ethereum did. When are you going after Ethereum? That's what you did to XRP, and they didn't even do an ICO.
the efforts in some collective group of individuals? That's central test. It's called the Howey test. There's other broad brushes with regard to this as well, as to when something is a note, called the Reeves test that Thurgood Marshall wrote a few decades ago. Fundamentally, the SEC is here to help protect the public from fraud, and that's why Congress painted with.
But are you going after, Joseph Lubin brags about how they're creating lending products on Ethereum. Are you going after them? I mean, the questions we could ask this guy.
Broad brush.
Yeah, thanks for the clarification. And unfortunately, Congress didn't create the Howey test. The courts did. The same with the Reeves. And frankly, we're dependent on this patchwork of regulation by enforcement. Obviously, there are people that feel that a particular, token like Ether is treated differently than one like XRP, for example, is something a matter that's before you right now. Because of the same thing. Is it centralized or is it decentralized? Who has control? And I think that really gets to the issue. Congress really should clarify. We've had a bipartisan legislation called the Token Taxonomy Act drafted since 2018. We can't get a hearing on it. It would provide a bright line test that would apply a 1950s case law, Howey test, to modern digital assets and provide some of that clarity. But could you, generically speaking, talk about the shortcomings of enforcement actions or even threatened enforcement actions versus the need for clarity, maybe a rulemaking process that would establish a bright line? Because really what you referred to was, well, come talk to us in a one-on-one kind of third world way where every individual firm cuts their own deals. What the market really needs is clarity. Wouldn't that be better than threatened enforcement?
Well, I actually think that the securities laws are pretty clear on this, sir. And I think that firms should just come in and register.
If it's pretty clear, then you hold Ethereum to the same standard that you do everybody else, and you didn't, and you're not.
But what's happened over the last 4 or 5 years is they've either chosen not to, or they've stood up in Singapore or Malta or Hong Kong or other countries and offered their services indirectly through virtual private networks. Not all of them. Some of them are here in the U.S. as well. And I think that our securities laws were written for a reason, to protect the public, the investing public.
I think you're right. We should protect the public, but we need to do it with clarity. And frankly, we should do it in a way that doesn't destroy the market. I mean, you're talking about fintech being the leading innovation.
Yeah. If I'm Gary Gensler, let's pretend I'm Gary Gensler. I got a congressman sitting here talking to me. You know what my stance would be? He's saying, well, yeah, we want to do all this. We want the SEC to do its job, but we want to do all this where we don't kill the innovation. My response, if I'm Gary Gensler, is, unless I'm owned by somebody else, my response is, you're right, Congressman. What I'm going to do is I'm going to halt all of these enforcement actions, and I'm going to sit in a room with you guys from the finance committee. Let's bring the CFTC in. Let's bring all the agencies in, and let's not walk out of that damn room until we freaking get this worked out, because we're smart people and we can work this out. But that's not what he's saying. What he's saying is, well, this is what our job is, and we're gonna keep doing the things, and we're gonna keep destroying the innovation until you guys make us do otherwise. That's what he's saying, and that tells you that this thing stinks to high heaven.
It has led in market after market after market in field of technology, from the ag revolution, industrial, on up through the internet age. Why would we want to destroy the fintech revolution and push it outside the United States when we could foster it. I refer to your threatened enforcement action on yield products, for example. We should go through a rulemaking process, or frankly, Congress should act, which is why I'm drafting a bill that should be submitted shortly to clarify yield products and how they should be protected. The last thing I'd say is certainly not all stable coins should be considered securities. And I think you've referenced that, but I look forward to working with you and your office to provide clarity for our markets.
Now, after you listen to all of that garbage, okay, here's the most insulting part about all this, folks. Did you know, because I wrote it out, the only digital asset that has known founders in the United States of America that has clarity is Ethereum. It's a quasi-clarity because they won't even answer if it's a security or not now. By design, by the way. The only one in the United States of America, Bitcoin, the supposedly the founders unknown, but the only one that actually has founders who did an ICO and a pre-sale and sold a security and are working on issuing another one, Ethereum 2.0, the only one that has clarity in the United States of America was founded, the two core founders were Canadians, and one of them speaks Russian, and his family's originally from Russia, is my understanding. There is a big freaking problem with this, folks. This is a problem. Something really bad's going on. I don't understand all of this. Nobody should understand all of this because it doesn't make sense. This is the guy.
The Ethereum Foundation rightly made the decision to set up shop in Switzerland for philosophical and political reasons. And many were concerned that the United States would be a dangerous place to operate or live, given that some people felt like we were issuing a currency. We thought of it as a crypto commodity or a crypto fuel, but certainly it had a lot of the characteristics of Bitcoin and could be considered a cryptocurrency, is a cryptocurrency. And in the past, the United States government hadn't treated people kindly who thought that they could issue their own token of value. And we've seen some interesting discussions over the past years about whether those value tokens should be all considered securities or not. And I think the SEC has done some really great thinking about the fact that some of these value tokens can be just utility tokens, and that's where our legal work landed us. And
folks, this would not stand if Gary Gensler had good intentions. If Gary Gensler had good intentions, this wrong would be righted yesterday, because this is a farce and everybody knows it. All right, before I go, I was telling somebody today I was gonna make another contribution to my SEP IRA at iTrustCapital so I can pick up some more crypto. That's what I'll be doing here soon. You can go, if you haven't opened one, you can go and open an iTrustCapital IRA, or you can even roll over a 401k from an old job if you got laid off, or if you left a job, or you're retired, whatever. You can roll over a 401k or part of a 401k and create an iTrustCapital IRA to roll it into. So go check that out. I have links to this in the description and a coupon for like 1 free month. I'm the digital asset investor. I'm not an investment advisor. This is for entertainment purposes only. Please subscribe, hit the like button, tell your friends and family. iTrustCapital.